Hello and welcome back to another session of Market Outlook series. Today we are here again to discuss what happened in the week gone by and what to expect in the coming week. In this session, we will talk about Nifty, its performance, Bank Nifty, its performance, intermarket analysis, and what should we expect in the coming weeks. A lot of interesting stuff to unfold, so let's get started. So what you're seeing on your screen is the Nifty 3-minute time frame. Now what we're seeing on this time frame is this. On the 28th of July, the market correction started when Nifty topped out near the level of 20,000. Since then, we've seen two legs of correction. What happened in both of these legs of correction? When the first leg of correction unfolded, we saw that the index had given no positive divergence whatsoever. On the other hand, there was a negative range shift. When the up leg happened, there was a negative divergence appearing, which indicated the end of that momentum, which we basically saw from the second half of Tuesday, 25th July, all the way to the top of Thursday morning. And then a downside correction again happened, which lasted pretty much the entire day of Thursday and then Friday. But something very interesting happened on Friday just before the market closed. That is from around 2:15 onwards, that is the second half of the day, we saw the market giving a rally upward after giving a dip. When this dip was created, RSI formed what we call is a positive divergence. Now this positive divergence indicates that this correction, which started all the way from 20,000 to 19,600. 19,600 is the support level which we've been touting for a while now. So this correction seems to be over as per the 3-minute time frame. But for more visibility, for more understanding of this, let's move one time frame higher. We are now on the 15-minute time frame, and what the 15-minute time frame is suggesting is the same language which the 3-minute time frame just shared with us, that there is a positive divergence and this downside which we've experienced from 20,000 may in fact be over. Now let's move on to the 75-minute time frame just to reassess or just to borrow some more confirmation on this if it is available. Now what we're seeing on the 75-minute time frame is very interesting. Firstly, the momentum with which the Nifty achieved the level of 20,000 was very strong, and in order to indicate this little bit of a correction that we see, which we have seen from 20,000 all the way to 19,600, we can see the negative divergence was given by the RSI, that is a momentum indicator on the chart of Nifty, and now RSI has come down to the level of 45. Now if you know, 45 is actually the support level for the RSI during a bull trend. I will repeat that. 45 is the support level for the RSI during a bull trend. So when a stock or when a index is in a strong bull trend, then usually the breather that it takes or the correction that happens within that bull trend usually sees 45 as a support. And if you see in the recent past also, this has played out quite a number of times. So basically ever since the market broke out above the base of the 17,200, that is since the rally which has started from the end of March, we can see that RSI has not come down below the level of 45, which means it has been respecting the bull trend support level on the 75-minute time frame. Now that 45 has been achieved again with the bull trend very much intact, we can expect the market rally to resume. Let's quickly also take a look at the daily time frame to see whether or not there is anything different going on, and I see there is nothing different. In fact, the rally seems even stronger on the daily time frame, so we can expect the target of 20,600 to get achieved. So yes, you heard me right, my target on Nifty is indeed 20,600. The initial target I had on the index was 19,750, which got achieved last week, and the next target is 20,600, which I think should be achieved in the next 1 or 2 months given the strong momentum. So that was about Nifty. Now let's move on to Bank Nifty and see what we have here. Okay, so we'll do the same thing. We'll start with the 3-minute time frame, and what I see on the Bank Nifty is again, so a small, I wouldn't really call it a very strong, but some sort of a divergence is taking place. However, it does not encourage the same confidence which Nifty encouraged. And on the 15-minute time frame, actually does not look so good because there is a strong negative divergence here. So it looks like the correction or consolidation in Bank Nifty will go on for a while. This also makes sense because I was looking at the chart of the public sector unit index, and the public banks, the PSU bank, basically the PSU bank index, and it is not looking so strong either. And I have been telling my members in my Telegram channel that the banking sector on the whole looks quite weak. If you have active positions in the banks, I would strongly recommend that you either revise your stop losses and keep them a little bit tight, or altogether exit your banking positions, book your profits and get out before you lose any of that profit. Similar theme is also being played out in other sectors, but we'll get to other sectors in a while. Let's talk about Bank Nifty for now. So what is my support on Bank Nifty? For 44,800 is my support level. Now this level also coincides with this dark blue line that you can see here. This is nothing but the 200 EMA of the 75-minute time frame, as you can see here, right? This 200 EMA is around the level of 44,800, and this is where I think Bank Nifty has a support in. You can also see on the 75-minute time frame there is a much bigger negative divergence, and what worries me is the negative divergence is actually taking place here with RSI at the level of 60. This is usually not good news, because this usually indicates the end of a bull trend and the beginning of a bear trend. Okay, end of a bull trend and the beginning of a bear trend. Why? Because during a bear trend, RSI's resistance zone is the level of 60, and the fact that with the price being at all-time high, RSI reached the level of 60, topped out at the level of 60, is not very good. So I am not bullish on banks at all. In fact, I am bearish on banks for the coming few weeks. So that's about banks. Let's take a look at the daily time frame. So the daily time frame is not resonating the negative stance that I'm getting from the intraday charts, but that is also normal because usually the Bank Nifty does not reflect that kind of negativity on the daily chart very promptly. Okay, so different stocks have different ways of interacting even with a single indicator, and this is the reason why, my friends, I tell you, don't work with too many indicators, but because you will end up diluting your attention. It's better to work with one set of indicators and refine your skill set there. When you work with too many indicators, too many different indicators, you end up telling the chart to repeat the same thing to you over and over again in too many different languages. It's not very efficient, it's not very productive. So don't do that. So that was my analysis on Bank Nifty. Now let's move on to our favorite intersector charts analysis and see what we have here. So since Monday, what we can see is the pharma sector has been a massive winner this week, right? Beautiful rally. Pharma and healthcare have both moved up nearly 5%. We had exposure in stocks like Ajanta Pharma, which has done absolutely phenomenal this week, right? The next in line is the Realty stock. Again, Realty sector has been said as gaining in strength and momentum for quite a while, and we can see that here. Metal sector has been a winner, media sector has been a winner, and energy sector has been a winner. Out of these, I think metal sector is where I can see rally continuing. I can see rally continuing in energy sector. In fact, stocks like Tata Power, stocks like Power India have started to gain quite a bit recently. Infrastructure is doing pretty well, expected to continue to do well. Next, PSU sector, we talked about it. PSU sector has already been on the loser end this week and expected to continue to be on the loser side. Auto sector, be careful in auto sector. Okay, I was studying charts like Maruti, TVS Motor, Eicher Motor. I do not see a strong rally unfolding there, so you be very careful. Now the IT sector is again very interesting sector. IT sector has been falling for nearly 2-3 weeks now, but I think it is going to come back into power. I have already started sharing my best picks from IT sector, cement sector, like I said, infra, the healthcare sector and the metal sector with my members. Now if you are interested in becoming one of the members, I strongly suggest you go forward and join this Telegram channel. Very easy to find this. Simply either you can add this link t.me/EXP-Invest in your browser and join the channel through that, or simply go on your Telegram and in the search box here just write EXP-Invest in, and you will be able to find my free Telegram channel very easily for you to join. Okay. All right, so that's all that I have for the sector analysis this week. I hope you found this analysis useful. If you did, please connect with me and don't forget to subscribe to my YouTube channel for more useful content on the stock market. Goodbye.